But this information must be quality information. Must be quality information. So what does this mean? You know, when we say the information must be quality, what does it mean? The code of best practices is saying here that communications and reports by the board should be in plain language. That's what we mean by quality. It should be understandable and it should be consistent with previous reports. It should also have meaning and relevance and should be provided in a timely fashion. You know, so when we say information should be quality information, it must be based on the principles of fairness, promptness, relevance, openness, with substance taking precedence over form. Who remembers what substance over form is? And I don't think it's even relevant to strategy, but who remembers substance over form? Can anyone share with us what it means, substance over form?
This is where the organization or the individual looks at the substance of the transaction instead of the legal form of that transaction.
So what does that mean?
Okay, so so let's say, for instance, leases.
Mm-hmm.
Leases, for example. So, for example, leases, you don't own the asset, you don't have title to the asset, but because of the nature of the transaction of the leases, that's the finance lease, you are able to record it into your books as though you own it. So that's the substance over the form, which
fantastic. That's a very good example. So it's like those times when we are kids, right? They will say something like, for those people who were dadaba and they had bicycles, some of your friends will say, "Mommy, ride," or "Give me a ride, give me a ride." Then you are the legal owner of the bicycle, but you give the bicycle to your friend to maybe ride for maybe a day, or some few hours. So even though you have legal title to the bicycle, someone else at that point was deriving economic benefits from it. So the lease example is a perfect example. Yeah. That was just by the way. Disclosures in annual reports. The Code of Best Practices specifies a number of disclosures that should be included in the annual report of a listed company, in addition to those required by law or other regulation. These are a chairman's statement. A chairman's statement. Please don't forget this. A chairman's statement. A chairman's statement. So if you look at annual reports, this is one of the things you see. A chairman's statement will talk about, you come and give, it's like a summary of the company's performance. You come and talk about the company's performance and talk about its future prospects. The company's performance and its future prospects. So that's the chairman's statement. Then there's also a statement by the board of its responsibility for the information contained in the report and financial statements. Statement by the board of the adequacy of the company's internal control. So you have financial statements here, you have internal controls here. For those who are doing auditing, this will come in handy to you. A statement by the board about the degree of compliance by the company with laws and regulations. With laws and regulations. In audits, I think, God willing, tomorrow we'll be doing financial audits, operational audits, and compliance audits. Yeah, so financial audits is dealing with the financial statements. Operational audit is dealing with internal controls, and compliance audit is dealing with compliance with laws and regulations. So that's what we see here. Similar thing we see here. A statement of the extent to which the company has complied with the corporate governance practices specified in the Code of Best Practices. And also a statement from the board indicating that it is satisfied that the company is a going concern. It's a going concern. So these are some important what did I do? Okay. Now the code of best practices also lists other items that should be disclosed in the annual reports. It should name things like the identities and percentage shareholding of substantial shareholders. So sometimes if you pick let's say EcoBank and go into their annual report, you see, those who have substantial, not 0.00% people, those who have substantial shareholdings. And I'm sure somebody asked you what is substantial, but it depends on the relative sizes, of investments into the company. So sometimes they'll take like top 5 people or top 6 people, depending on the relative sizes of the investments, right? A statement by the board of its responsibility for the information contained in the reports and financial statements, significant cross-holding of shares with other companies. Cross-holdings. Does anyone have an idea of what a cross-holding of shares mean? When we say cross-holding of shares, what does it mean? Any idea? So cross-holding simply means that a public company, or what we call an issuer, owns shares in another public company. So, or listed company. That's in Ghana, we say listed company. So EcoBank and Fan Milk, they are both listed companies in Ghana, I think. So EcoBank, let's see, or Fan Milk owns shares in EcoBank. That's cross-holding of shares. Another thing you want to talk about is related party transactions. Related party transactions. You also want to talk about fees paid to the company auditors. If there are any other material issues, you want to raise them. Yeah, these are some disclosures you make in the annual reports. Now, meetings of members. General meetings of, any questions? If you have any questions, just let me. General meetings of shareholders are another means by which the board of directors should communicate with shareholders. Right. We have already said this when we are talking about relationship with investors. The Code of Best Practices, however, suggested that the AGM is the main method for meeting and interacting with shareholders. Who has been to an AGM before? Anyone been to an AGM? Annual general meeting? Okay. The annual general meeting must conduct the business required by law. In addition, provide shareholders with an opportunity to ask questions and obtain the views of board members. So this was what I was coming to. For in case you have been to an AGM, you realize that one of the things, you see the board there, you see shareholders, then shareholders have the opportunity to ask questions, because they have invested into the company. So they ask questions and get the views and, viewpoint of board members. The Code of Best Practices makes several comments about general meetings and the annual general meeting in particular. The whole aim is that you need to maximize attendance and involvement by shareholders. You want your shareholders to participate in your general meetings. And you can do this by, if you want them to participate, it's just like any other meeting, right? If you want them to participate, you give them adequate notice of meetings. It should also be held at a time and a place that would, make it easy for people to attend. You don't do annual general meeting at 11:30 p.m. Things like opportunities of voting by mail should be supported. So by mail, I know in Ghana, it's quite difficult to implement some of these things. But in other countries, voting, for the general elections can be done by mail. So you vote and you post. In Ghana, I'm not sure that can work. Even the normal one, it's a struggle. The chairman of board committee should attend general meetings to respond to shareholder questions. And shareholders should be given an opportunity to place matters on the agenda for deliberation. Okay. Any questions on this? If you have any questions, just let me know. Amazing. Okay. Code of ethics. We cannot talk about governance without talking about ethics. They go hand in hand. Good corporate governance depends on ethical behavior by a company. Good corporate governance depends on ethical behavior by a company. This requirement is emphasized strongly in the Code of Best Practices, which requires listed companies to have their own code of ethics and statements of best practices, which should be applied as part of the company's corporate governance practices. Now, who formulates this code of ethics? It should definitely come from the top. So the board should be responsible for the formulation of the company's code of ethics and should monitor adherence. The code specifies that the code of ethics should commit the company to the highest standards of professional behavior. So that's the whole point of ethics. And it should be developed in association with management and employees. So it's not like the board should be sitting somewhere and do their own thing and impose on employees. It should be developed in association with them. It's very, very crucial. Receive total commitment from the board, including the managing director and the CEO. The code of ethics should receive total commitment from the board. And it should be detailed so that it gives clear guidance. It should not be vague, right? Because if it's too vague, people will not be able to understand and imbibe the ethics, and the purpose for which you set up the code of ethics will not be achieved. Obviously, if you have a code of ethics and it's in a book, no one is going to know about it. So it should be communicated formally to the individuals and the organizations to which it applies. It should communicate it. Since issues change in the organization, things change, people change, environments change, this code of ethics has to be reviewed regularly and updated as and when necessary. Any questions?